Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Kelvin, thanks for coming in.
Hey, hi, thank you, Brian. Yeah.
Now,
good afternoon to you. Yeah.
Good afternoon. Can we take a quick look at markets, Kelvin, before we get your insights?
Sure.
So we're going to start with the SGX, which just closed marginally higher, currently at 0.18% higher, which is at 3,005.69. Now, the SGX bucks the trend against the sea of red across the region. We've got Bursa Malaysia at 1,580.13. It's down 0.52%. The Nikkei is down sharply at down 2.54% at 28,807.50. The Shanghai Composite is down 1.58% at 3,520.24. The Hang Seng is down 2.55% at 29,118.30. ASX 200 is down 1.35% at 6,725.70. Rounding off the sea of red is the Kospi, which is down 1.46% at 3,037.74. Kelvin, what do you make out of the sea of red this morning? Now, investors are obviously rattled about the rising US Treasury yields and inflation concerns.
Yes, definitely. Because number one, what we're seeing right now is another inflationary spook, fueled by this rising global treasury, rising sovereign bond yields. So what we could see right now is, let's say we take the US benchmark long-term 10-year yield as a benchmark. So yesterday it rose by about 6 basis points to close at 1.47%. So technically, right, there's a major resistance level, which is at 1.57%, which the market actually back off last week, because last week it hit an intra-week high of 1.61%. But nevertheless, it's still close below 1.57%, which is kind of as a kind of comforting tone for the global stock market as a whole. So what we're seeing right now, right, this leg of sell-off this week has been kind of a more pronounced by the higher growth stocks or the higher growth team plays. We talk about like tech stocks, the FANGs, and also this disruptive, innovative stocks like Tesla, NIO, and Expert. Those are EV stocks that actually also took the brunt of it. So in fact, Tesla now has already entered into a bear market territory from its all-time high in February. So what we are seeing right now, right, is a kind of a rot or a pro-indiscriminate selling across the growth space. So right now, a lot of investors' concern right now is that will be spilled over to the other sectors like the cyclical and value-oriented stocks, like we're talking about financials and energy. Yeah. So, yes.
So Kelvin, you don't see this as a sector rotation play, because after all, they've run up quite a lot. Your Apple, your Amazon, your Alphabet, your Microsoft. So yesterday overnight, we had all of them dropped over 2%. Could that also be a case where it's a sector rotation play? They are cashing in, taking profits, and then moving on to laggards and cyclicals?
Yes, definitely. So if you are looking at right now, one of the reasons why Singapore's Straits Times Index is actually outperforming the rest of the region, because due to actually the Straits Times heavily weighted by our three local banks, DBS, OCBC, UOB, which in fact, if you look at DBS, actually up 1.31%, which is pretty remarkable. So it's a clear sign of what I call it a rotation into the laggards that has been underperforming in the last 5 to 10 years since the circular bull market started in March 2009. But however, I'm still a bit concerned, right? Because if this bond yield keep on rising much further, so if we start to see a weekly close above 1.57% on the US Treasury 10-year yield, it could actually create a negative domino effect into this cyclical and value stocks as well.
Now, let's move on to China. Now, tomorrow they're going to unveil the new 5-year economic plan over a 2-day period. Now, what are the market expectations from this announcement, given the signals prior to this?
Yes, because if you look at, in fact, what about yesterday or the day before, there's this key banking regulator from China actually give a sign of warning regarding about all stock market bubbles internationally. So investors would like to see China planners, what are their plans for the next 5 years? Especially, are they concerned about the ongoing debt situation in China? Okay, number one. Or the second thing is that will they start to actually unveil a targeted annualized GDP growth for 2021? Because in the past few years, they do traditionally actually adopt this annual GDP target. But last year they managed to. Last year they actually kind of took off this target. So investors will be or traders will be looking around for this kind of signals. Okay, if they do not reveal or unveil this annualized target for this year, what it could mean that over here is that hey, they are actually not prioritizing growth over stability, because China regulators in the past few months, they're pretty concerned about the long-term stability of the debt overhang in China economy. So what investors want to see over here is that perhaps it's more of a targeted fiscal stimulus that is being targeted to key sectors rather than a broader sector. Now, key sectors will be like, yeah.
Sorry, Kelvin. Also, one of the key things that that also was telegraphed earlier towards the end of last year in greater prominence is the whole concept of the dual circulation economy and greater self-reliance. Is there an investor expectation as well that there will be more messaging in that area?
Yes, so definitely, right. I do reckon that they may start to, we call it, more resources will be focused into key areas like their local semiconductor industry, and in fact, their localized 5G big tech sector, where we may start to see another boost from the central government to make it self-reliant rather than getting parts and pieces from the global supply chain. So if that could see a kind of a big boost from what I call from this China central government stimulus plan, public stimulus plan, it could potentially we call it see kind of a positive feedback look into their local China big tech place, which is actually part of their dual circulation plan to counter US supremacy in terms of 5G and in terms of the area of chip making and chip design.
Now, Kelvin, for the rest of the week, and it's today and tomorrow essentially, but there are lots of key events and data points happening. What should we be watching out for that will move?
Okay, sure. So definitely one of the key highlights will be, in fact, in Asia time later, early tomorrow morning, which is close about 12 a.m. Friday time. Well, Powell will be speaking publicly. So traders and investors should be watching closely about whether he highlight any concern about this heightened risk of inflationary expectation that is driving the rise in this US Treasury 10-year yield. So any signs of his take on that could actually move the stock market indirectly from the impact from this yield itself, from the longer dated Treasury yield. And secondly, we'll be closely watching more on the FX space. Will be definitely the end of Friday. So the end of the week, which is Friday, pardon me, will be the US non-farm payroll data, where market is expecting coming in at this level. Okay, let me take a quick look at the calendar again. Where coming at 182K, way above last month disappointing figure of 49K. So anything that is in line or maybe above 182K, that could actually drive this dollar strength higher from this kind of a sideways movement that we see right now on the markets.
Thank you very much for your insight.
Now, thank you, Brian. Yep.
We've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.